Are you tired of spending countless hours looking for the most undervalued companies on this crazy market right now? No needs to look further. The good news is that in this video, you'll find 4 of the most undervalued stocks that are currently available and that are offering the most potential of upside for the next couple of years. So without further ado, let's take a look at my pick Number 1. To start this list in strength, I've decided to go in a sector that is well appreciated by all the sports enthusiasts, and I've picked the company Lululemon with the ticker LULU. Initially, this company was offering yoga pants and yoga wear to their customers, but through the years, they've been able to expand their operations to now offer different athletic wear, lifestyle apparels and accessories, as well as personal care products. However, recently, we've seen that the company has lost close to 20% of its value, where on the 22nd of March, it has lost only during the day about 14% of it. This surprisingly came after great earning results post just the day before that were able to beat the analyst predictions. Indeed, in the fourth quarter of 2023, they've been able to increase their total net revenue year over year by about 16%, and on its side, their net income has been massively increasing by many thousands of percent year over year. These are some truly incredible results, but in that case, why have they lost so much value in a such short period of time? Well, this happened because during their earning release, the company also announced their new guidance for the new year, which were quite below the analyst expectations. For instance, during the first quarter of 2024, Lululemon expects to achieve some net revenue of between $2.18 to $2.2 billion, or some increase year over year of between 9 to 10%. But on their side, the analysts were predicting for the same quarter some net revenue of about $2.25 billion, or some increase year over year of about 12.5%. Add to this, for the same quarter, the company expects to have some net sales of between $10.7 to $10.8 billion, which is also below the analyst expectations of $10.9 billion of sales. This poor guidance comes as many retailers are struggling with uncertain demand as well as a slowdown in discretionary spending. And so despite some great financial results, this stock in my opinion is currently oversold, which could represent a great entry door for many investors on the long term, especially with their price prediction at the moment. Now, the second stock on my list is one of the largest companies in the entire world, which is the company Apple with the ticker AAPL. This worldwide giant in the technology sector that is currently worth over $2 trillion is well appreciated worldwide because of the quality of their great products, notably with their Mac, their iPhones, and their brand new Apple Vision Pro. In that way, over the past couple of decades, this company has been able to establish themselves as a leader in their industry. This now makes that the Apple cult followers are now looking every single year for the new iPhones. In the past, the big success of their products came from the quality of the components that they are using, which was way better compared to their main competitors. However, recently, we've also seen that the company has started to correct and lost quite a lot of its total value. This recent decrease of the valuation of Apple is mainly correlated with the growing competition that they are facing in China with their main competitor Huawei, where we've notably seen that in the month of January, this competitor has been able to surpass Apple in their market share of China with about 17% of their market share compared to 16% for Apple. And the crazy part about it is that the recent statistic has shown that Huawei demand is higher compared to their supply, meaning that they could be able to sell even more phones in that market. In total, for this giant technology company, we've seen that Apple has lost about 24% of their total sales in the last quarter in this particular market. Nevertheless, for a company like Apple, this isn't a big deal for the long term, since they are still able to continuously increase their total revenue and beat the analyst predictions in terms of their earnings. Plus, with an excellent board of managers directed by Tim Cook, they are still able year after year to come out with new innovative solutions to keep up the great name that that they have. And so this simply means that for the individual investors, this type of dip could be a great buying opportunity for the long term if you're looking to invest in one of the largest and most important companies in the entire world, especially when we know that Apple currently has the lowest price to earnings ratio among all of the technology companies with a P/E ratio of less than 25. But now for the third pick on my list, we are now going into the Canadian telecommunications sector with the company Bell Canada with the ticker BCE. This $40 billion company that is offering a wide variety of products and services to their clients, going from cell phones to internet and television services, is currently facing quite a lot of difficulties. Indeed, at the beginning of March, after seeing important decrease of their profit margin, they've announced a massive layoff of about 9% of their total workforce. And the least we can say is that it has made many shareholders and other people pretty mad. The main objective behind this decision is obviously to decrease the total expenses that are notably linked a lot with their total debt, which could help them to increase their total profitability. In fact, when we look at the valuation of Bell, we can notice that it has started to go downhill as soon as the Bank of Canada has started to raise the interest rate. This is mainly explained by the fact that the company currently has a massive $36 billion of debt with a debt to equity ratio of about 175%. But in fact, it is pretty normal for any types of telecommunication company to have such a high amount of debt because they are usually considered as some high capital expenditures company. Indeed, these types of companies usually needs to spend a large amounts of capital to invest in equipment and manufacturing, notably to be able to expand the scope of their operations all across the country. This has been the case of Bell, where over the past couple of decades, they've been able to expand their 5G and 5 network all around the country to over 7 million Canadian customers. Nevertheless, with the most recent announcement of the Canadian Radio, Television and Telecommunication Commission saying that they want to increase choice and affordability for high-speed internet services to many Canadians, this has discouraged many companies like Bell to expand the scope of their operations across the country, where the company has announced a cut in their spendings of $1 billion between 2024 and 2025. But at the end of the day, Bell is operating in the tripod sector with Rogers and TELUS in a sector that is now become a pretty much essential sector. And so it means that with the project decrease of the interest rate over the next couple of months and years, this 8% dividend stock that is down close to 30% since 1 year could become a pretty good buying opportunity for many investors at the moment. And for the last stock on my list, it is another company that I've mentioned a lot recently, which is the business Tesla with the ticker TSLA. Indeed, if you've seen many of my recent videos, Elon Musk companies, in my opinion, is currently quite a bargain at this price. In my opinion, by being down by about 30% since 1 year, this company is currently too cheap to be ignored for many investors. In fact, in their case, we've seen that the biggest hit that they've took was mainly because of the poor earning results that they've had recently, despite the fact that Tesla is still able quarter after quarter to increase their total production and deliveries of new vehicles. The biggest problem happened at the end of 2023, where we've seen that the company has announced a massive cut prices of many of their vehicles, with obviously the objective to make these types of cars more affordable for the global population. The negative point about it is that in the short term, this highly impacts their profit margins, which was in the past considered as one of their biggest accomplishments. However, a nice fact about Tesla is that it is yet to be priced as a technology company that has great competitive advantage in their field. With the AI revolution that is coming to our door and that has become more and more popular recently, Tesla is far in front of their competition in that field, notably with their great autonomous driving features. Add to this, over the last 5 years, we've seen that Tesla has also been able to develop greatly their business model to develop other income sources, notably in terms of their different energy generation and storage products such as their famous Powerwall. Just like for Apple, the main problem that Tesla could face in the short term could be coming from the high competition that they have in China. However, since this company still has a great competitive advantage compared to their main competition, I still see this company as being the #1 company in the EV sector for the next 10 to 30 years. Add to this, many analysts are currently seeing Tesla as being one of the most oversold companies in the entire market, meaning that it could be due for a potential rebound. And so with the incredible growth that the company has seen financially over the past 5 years, notably in terms of their total revenue growth, the current dip that we see with Tesla could be the same scenario as we've seen last year with Meta, where many investors could accumulate many more shares of it for the potential next bull run. And it is why personally, over the last couple of weeks, I've decided to add even more shares of Tesla to my stock portfolio. But talking about that, if you're looking to find what are the different individual stocks that I hold in my stock portfolio, well, check out the video that's gonna be right over here, and I will see you soon. Peace!